Hi, I'm Greg Ullin with Reynolds & Reynolds, and this is Connected. Today, I'm really excited to get to talk with a couple guys from Brightline Insurance Services, Andy Runyon, Vice President of Cyber Specialist, and Forrest Pace, Cyber Practice Leader. We're going to dig into cybersecurity, cyber insurance, everything that goes into that. It's pretty timely right now with a lot of the pieces going on in the industry. So, gentlemen, thanks so much for joining and hopping on and having a conversation.
Thank you.
Yeah, thanks for having us.
Yeah, absolutely. So I mentioned it being timely. Just a couple weeks ago, Ferrari announced they had a cyber breach, so some customer information was leaked there. Saw some banter from dealers, Toyota and Lexus. A couple stores popped up on basically a hacker forum where their information was available for sale. These types of incidents keep popping up, and then you layer in, the FTC Safeguards Amendment rule amendments, or the rule amendments that are coming into play in June. So cybersecurity is really top of mind for a lot of dealers out there. So wanted to chat with you guys about the impact all this has on your world and cyber insurance. So maybe we can start, maybe Andy, you can take it to start, and then Forrest, you can build off of it. But what are you seeing as far as activity, specifically in automotive retail and dealerships? Are you seeing things pick up, slow down, and maybe also provide a little context around what you all do at Brightline?
Yeah, thank you for having us today, man. We just kind of in general, activity has picked up definitely since COVID in the small to medium sized business space. When we talk about COVID, we don't really speak on COVID as a medical or a political term. We look at it kind of as a marker in time in the cyberspace. And prior to COVID, a lot of cyber crime was focused around large, Target, Equifax, places like that. Post-COVID, we've seen a large increase in activity in the small to medium business space, which will include dealerships as well. We've seen ransoms over the last year. We spend a lot of time working with the CISA, the Cybersecurity Infrastructure Security Agency, in our region, and spent a lot of time with those guys in 22 running around going, hey, the average ransomware payment is $258,000. I mean, I could say it in my sleep. Well, the latest stats came out from the end of Q4 2022. That number's up to $405,000 on the average ransomware payment. So, activity is picking up. The claims severity is increasing, and we're starting to see claims affect folks on Main Street, not just Fortune 500 companies, but the business owners that that your kids play ball with, that you go to church with. I mean, those guys are getting hit as well. But Forrest, anything to add to that?
Yeah, I think the other piece that we're seeing in the marketplace is the private sector is kind of adding their own teeth to where this doesn't become a mundane issue. Whether it's contractual requirements or individual industry requirements. We're seeing, as you alluded to, the FTC requirements that are rolling out. It does seem to be in the automotive space that there has to be a quicker maturity cycle, right? And it's one where what worked in the past works up all the way until it doesn't. And I think that's where both insurance and technology can play a role, in that for a while now, it feels like in the small to medium sized space, and I'm talking, I guess, under Fortune 1000, right? And that's the medium space for us, is let's go after these solid businesses that they almost know what they don't know. And I feel like that's constantly changing when we're talking about cyber insurance, because, 10 years ago, it was a completely different process. But now it feels like, okay, these acronyms are changing every day. I need MFA, I need EDR. And so it feels like the goalposts are moving, which, in my prior life as an underwriter, I would say that's a great thing. I think the communication around that needs to be better. And so that's where we're seeing clients, and specifically auto dealers, kind of having those conversations about how can we mature our organization, not just from an insurance side or a technology side, but a compliance side, to where we have a modular approach that we can actually grow into this, as opposed to kind of being hamstrung by it.
Yeah. And if you think about that, from how IT is viewed by the dealer owner, That's massively changed over the last 20 years. We were talking about this offline earlier. 20 years ago, your IT guy was the guy that made sure you changed your password and helped you fix your printer. And now he's the guy that's safeguarding your business from ransomware and wire transfer fraud. Like, he is critical to the everyday success of the business. And just how IT is viewed by the dealer owner and the employees is massively different.
Yeah, 100%. And when you think about too, from an insurance provider's perspective, I'm interested, from your perspective on what this has meant over the last handful of years, because my perception is, and maybe this is the wrong one, so correct me if it's wrong, but my perception is a lot of people got into the cyber insurance business, 5, maybe 10 years ago, but not too long ago. And you mentioned kind of the goalpost moving, right? And they were moving for everybody. So there were insurance companies that took hits that their premiums weren't covering. Right. And so you look at that and then you over adjust the other way where premiums go super high to make sure your risks are covered. So in today's world, where are we on that spectrum? So I'm assuming, we started where premiums were too low, right? Because we just didn't have the data, jumped to a place where premiums were far too high because we were trying to really cover the risks. Right. Where are we on that spectrum today?
So I think you kind of set the scene really well, because it helps with starting off with kind of just foundational principles, is that cyber insurance is a very new product. And, going back to Y2K was kind of where the origins of cyber insurance started from. But you have kind of two age-old principles of insurance and the social good and security with the cyber side. But when it comes to what is needed to see that happen has been a completely different story. And I think what we've seen over the past kind of in the initial, let's say 10 years ago, when there started to kind of be this influx of new capital and resources, there were people and positions and roles that did not exist 10 years ago that are now highly sought after roles. And we're talking about things like, we now know what specific forensic investigation types are and where specialties lie. Ransom negotiators. This wasn't necessarily a career path that existed 10 years ago. So I think part of it is it's understanding that it is a new product. It is learning, and that kind of annual renewal cycle of the goalpost moving is a function of the product learning and working. I think how that could be described, though, is that the carriers have done a decent job of pricing the risk, assuming that cyber insurance is not the only product, or they have to be very, very good at underwriting. There are very few that are great at underwriting. And so we're seeing kind of the capital feedback play out, in that if we can invest in the insurance side, well, we're going to need more premium. There really hasn't been kind of a centered focus around, well, how can we actually address the risk to put out the fire, instead of just kind of making sure there isn't as much tinder around to spark. So that's kind of been, at least in my perspective, of how things are changing. Now, what that means in the real world and on the ground is that we are seeing more of these acronyms, and there is a higher burden placed on clients that haven't really been exposed to this level of technical detail. And what that really means is, it means that you kind of need to be friends with your IT person. And a lot of times it's still the same guy 20 years ago who was changing passwords, and he still does it. And he knows kind of the lay of the land, or she's been there for 15 years and knows kind of where the credit reports are and how they're secured, and knows all kind of the nuances of the system. But it takes knowing that process. And historically, or at least within the past 5 years, as the insurance side has caught up, there's been kind of a contentious relationship between the underwriters and the carriers, who are like, okay, well, you didn't have this in place. We have information that shows that this needs to be in place. And then the client goes, well, they go to their tech person and they say, okay, why don't we have this in place? We're being told that we need it in place. Meanwhile, the tech providers have been saying, yeah, we've been pushing MFA for the past 3 years to you guys. And so there is this kind of organizational disconnect that really has to kind of come at this from a enterprise savings standpoint, in my mind, and an enterprise resilience of, it takes your risk manager and your IT person talking to each other and that could actually lend you savings in securing your organization and getting better premiums. And so I don't think, while the market is changing, I think we're starting to see some stability, and that the kind of underwriting guidelines are changing, but they're not changing as rapidly as they were when everybody was kind of rushing to remote work. And so for me, I see it as a young industry that is stabilizing, but you have to kind of understand that by buying cyber insurance, it is a new product that is still evolving and learning what those requirements look like. I guess the last piece to that is that, understanding that property insurance, there is a kind of the winds might blow harder, and there might be more frequent storms and inclement weather that causes damage, but they're not learning from the previous storm. Within cyber insurance, there's a malicious actor on the other side most of the times, or sometimes it's an error. But everyone is constantly learning from the tools and tactics of how those things happen. And so it does provide kind of a unique situation, and that carriers are contractually obligated, via the insurance policy to pay, where I believe that they kind of see it as their skin in the game. So it's a really unique situation playing out, and for us, it's really about trusting your technology providers and the team that you have around you.
Yeah, no, and there's a lot there. So there's a couple of things I want to double click on. No, I appreciate it. It's good stuff. First of all, I just want to highlight the analogy that you made, kind of comparing property insurance versus cyber insurance, and the thought process of, I just want to call this out because I thought it was brilliant. The next storm isn't learning from the previous storm, right? It just happens. But you truly have an individual, or to be more clear, a large set of individuals that are learning from every interaction and continuing to get smarter and smarter and find new ways to do damage, which is kind of terrifying in a lot of ways.
Yeah, and we try to walk that fine line of not wearing kind of the Chicken Little label, but also realizing that there's certain things, and I think we're seeing it play out in ways that it's just like, okay, it's okay to accept that this feels abrupt. It is. The internet as we know it has been kind of only 40 years old. Let's just accept that it is a new kind of construct where, man, we can't quite comprehend how fast everyone is learning while we try to figure it out.
Yeah. And the unfamiliarity for business owners makes the underwriting process kind of contentious sometimes. So one of the things that we always try to do is kind of go back to that property insurance allegory. And I'll ask guys and I'll say, hey, if you were applying for property insurance, for building insurance, and you had no sprinklers, no exit signs, and the rafters were made out of matchsticks, would they give you fire insurance? Of course they wouldn't, right? There's no chance they'd write you. So let's take that and let's apply that to cyber insurance. You don't have business class email. And I mean, specifically talking about dealerships and what we've seen at the ground level. You don't have business class email. You don't even know what MFA stands for, much less do you have it in place, right? We might have firewalls. Let me run back and ask Jim Bob, who works on the floor, who kind of does our IT stuff too when he has time. Those are the things that we're hearing we're talking about dealerships that run 7, 8, sometimes 9 figures in revenue. Why would you offer insurance? It really is apples and apples. People just don't see it that way because they don't understand the technicality of the IT structure. So trying to make that relation to property insurance makes people sometimes go, well, if you put it like that, it does kind of make sense. As far as the underwriting questions that are going into, being able to place coverage and get decent coverage at all, or, be able to get a fair premium or a deductible that you're okay with.
Yeah. And I guess kind of piggybacking on that just a little bit is that it's okay too, I think, is the other message to the clients. Like, you've obviously built a successful business to this, like, by doing this and in this way. And I think it's showing them the resources that they have available, because nowadays carriers often offer panel counsel firms, which means you get access to pre-breach coaching and things like that, to where these resources can kind of, I guess, translate and make it easier to set up the breaking case of emergency plan in the drawer, that if these things happen, well, then Greg knows that he's on call on the third Saturday or before holidays. We go through, just make sure we're good. Like, there's ways to build governance around kind of where the starting point is. And a lot of these carriers are providing that support, but oftentimes there really isn't kind of a conversation around that, because it's like, okay, well, premiums are going up. It stinks, but our commission is still our commission. Your risk is still your risk. So the prices are just going up. And I think for that to change, it takes everyone involved, the buyer, the broker, the insurer, the vendors, the technology providers. Everyone has to be kind of not all equal voices, but they have to know what's going on in order to kind of keep up. And so I think the overarching message to these companies that might feel like they're drowning a bit is that it's okay. There are resources there. But, again, kind of lean on your team to kind of help give you that perspective of where the blind spots may lie.
Okay. No, that's good. That's good. And I want to dive in maybe, and if we can try to keep it as understandable as possible, just maybe a few of these topics and factors and resources. So you mentioned a couple of things. You both mentioned MFA, right? Multi-factor authentication, business class email, having a firewall. Like, there's a lot of these kind of factors that I assume go into even getting insurance, let alone pricing insurance, right? So what are some of those? Maybe we can just educate. And I think a vast majority, certainly, of our audience knows what these things are. Right. But for MFA, as an example, right? A lot of our dealerships are going through the process of enabling multi-factor authentication, but it is a process, right? It's you have to decide to do it. You have to enroll users. They have to log in, create a there's a step-by-step, and it doesn't take long. But when you multiply that by 90 or 200 or 1,000 employees, it does take time. It's a commitment, and so I guess. Why is it so important? What does it actually do, right? What's the benefit of something like multi-factor authentication? Maybe we can start there.
Yeah, I think of this category as a whole, kind of like your blindside tackle. You don't really think about them until you're getting sacked. And it's multi-factor authentication. And there are ways and reports that can be generated that show the kind of attacks they prevent. Same thing with antivirus software, or even things like a SIM tool to go over the security incidents. It really, what's being required, I think, is an understanding that this is shifting. The MFA, I think the industry needs to do a better job of connecting it to why, the claims, the types of claims that it prevents, the reasons why certain questions on the applications are asked. The reason for backups is important, because if you don't have to pay the ransom by the information that's encrypted, it's pretty straightforward. If we could back up and have a verified access at the time, then that prevents a good bit of claims. EDR is really, endpoint detection. It is really important about preventing kind of the level up. So if someone compromises the account of a junior salesperson, it's making sure that they can't escalate their privileges to an account admin, to a system admin, and go through kind of the entire process of compromising an organization. And so as we see these things maybe change or get reintroduced into the conversation, it's about understanding, well, here's how that shifts for me. And we've had really good, I like the clients that ask questions, right? They're like, well, you're sitting next to my tech guy. He's been our MSP for 5 years. Our downtime is only an hour. I really am not I'm not too concerned about business interruption, right? And so it's being willing to have that conversation and know your organization to the point of where are your strengths, where are your weaknesses, because your strengths, you can kind of absorb that risk, right? That's why your defense is there. But the technology is that defense side, whereas the insurance is the risk transfer. It's where you might have your weak points that insurance can help you shore up. And so for me, it's just understanding as these things pop up, does it actually mean something? Because it's not usually, Karen in accounting clicking the cat video. It's usually the CFO that's transferring approving the wire transfer. And it's just kind of how we've seen it shift. And so I think going into it, understanding that, hey, we might need some funds transfer fraud coverage, it is understandable, but you have to have that conversation first to know the difference of what I'm even looking at.
Yeah. And Greg, as the risk evolves, we've talked about the goalpost moving. I mean, I think we've mentioned that 4 or 5 times now, but as this claims data rolls in, on the insurance side, again, going back to property insurance, if a building is built out of X, we see higher loss ratio with that type of building material than we do with building material type Y. That same data is coming in on ransomware now, and we've seen from some carriers numbers that show, you asked specifically about MFA, that north of 80% of ransomware claims originate from accounts that do not have MFA on them. There's a pretty good reason to put MFA. You can sit there and argue with tech people all day about, well, all it is the front end protection. Somebody in underwriting sitting there looking at their loss ratio from 2021 going, this is pretty important, right? Just from a statistical standpoint. So there's that. And then the other part too, with these FTC regs, and kind of a caveat within this is that all MFA is not created equal. If you think about, from a compliance standpoint, knowing what employee was logged into what station at what time, even with MFA, there's the ability for folks to share passwords. And we've heard at the dealership level, John works at his station and logs in Monday through Friday, and they bring in a 1099 guy on Saturday and Sunday, and he just logs in as John with John's password, right? That's not good from a compliance standpoint if there were to be a breach that originated from that station. So there's stuff out there. There's MFA out there that's available that's related to biometrics that we know exactly who has logged in at what station at what time, and they logged out. So, number one, I mean, you can kind of see where MFA, why that's important to underwriters right now, but then understand moving forward at the dealership level, just checking that box, it might help you get a better rate. It might help you be compliant for that box, but it is not in even remotely, in any sense of the word, created equal.
Sure. Yeah. And when you think about MFA and you boil it down, I mean, really, it's protecting the credentials, right? I mean, that's
Correct.
Essentially what it is. It's username, password, and then another way to identify that individual. So it's at a very basic level, that's what you're trying to do is protect those credentials. And then, you mentioned EDR Forest, right? So if something gets through and something happens, it isolates it to a workstation, essentially, right? Business class email came up, and I think there's a lot to be said there, tied in with firewall, right? Because so many, and you guys are probably can go a lot deeper than I can on this, but so many of these types of attacks originate with a click of an email, right?
Yeah,
I mean, realistically, it's okay. Something got through, which can happen, but then also like how do you educate your employees on, okay, this didn't come from inside the organization. Make sure that it's trusted. Hover over the link before you click on it to make sure that it's going someplace valid. There's a lot of pieces to that puzzle, and how do you, I guess, two-part question: how does a dealership or any business kind of implement that in a way that is they can trust that it's being handled appropriately, because there's still a human element to it? And also, how do you evaluate that from an insurance perspective? When you say, okay, do you have these processes in place? Well, the second question is, are you following them, right? So how does that fall? Does that come into the evaluation too?
Yeah, and it's an interesting kind of thing that they run into, because with business class email, really, it is such a big attack surface, right? And the people that salespeople, or maybe it's operations people, the people that live in email, really, I mean, kind of take it for face value, right? Like if I get an email in and it says that you're from the bank and I believe you, and people who live in email kind of just know that interface, and they aren't trained to look for certain behaviors. I think some of the things, though, that you can do, and I might be taking a little bit outdated approach to it, but like early on in the industry, when I was at AIG, there was a complimentary product, an auto shun was what it was called. And it was just a box that basically whitelisted and blacklisted the IP addresses that you worked with. And the way I think of it is, you can take two approaches. You can whitelist the applications, softwares, employee, all the users. Like, that's a very dedicated process. Or you can blacklist. You can, if you don't have any suppliers in Uzbekistan, then let's not allow IP addresses from Uzbekistan to touch our network. Like, there's some, I hate to oversimplify it, but there are things that we can do to put a fence around our perimeter of business operations. And a lot of that at times is just, and it's tough to say adjust. I shouldn't use that term, but it's like, it does require turning on Microsoft Defender, or, actually activating the services that Microsoft provides is a good start. It's not free. Everyone is moving, kind of, you alluded to it earlier, the per user per month subscription model, because we're all moving to recurring revenue. And, it's gone so far as the OEMs are putting it into the cars, which is an interesting concept. But that's out of my lane. I know that. But it's really just understanding that that's the model that everything is moving to. And as we move from CapEx to OpEx, it's knowing that, okay, this is kind of how that is shifting, especially given the rate environment. I think it's understandable that this model is playing out in a way to where, technology spend is going to be worthwhile in the long run. And so I don't know, Andy, if you had anything else to kind of add on
the business class email. I mean, just kind of making this stuff relatable. A couple of real, I guess, field, boots on the ground stories. Had a dealership close to where we're located that asked us to come in and consult. They knew that they didn't have cyber liability coverage that was appropriate. And what we see a lot, Greg, is we'll see dealerships that have cyber coverage, and it's through their dealer's open lot provider, but the cyber addendum is massively gappy or underinsured from where they should be. I mean, we'll see folks running, like I said before, 8-9 figures in revenue, and they'll have a cyber addendum that's $250,000 with no ransomware coverage or something like that. So we were called in to consult, and we asked some kind of base level tech questions, and email came up, and it was name@blankdealership.com. We see that a lot, right?
Sure.
And I was like, so y'all have got business class email? He goes, oh no, that's just, it's set up to look that way, but it's routing it to our personal Yahoo and Gmail accounts. And I was going, wow, and from that day moving forward, now I've dealt with a ton of dealerships. Miss Runyon got an early birthday present last Monday, and went and got her a new ride, and had a question about financing after we got done, and text the guy and said, hey, will you send me your email? And it was so-and-so at, Jeter fan 2 at gmail.com. And you're going, to your point, because you mentioned this, only trust stuff from within the organization. How do you know what's within the organization if everybody is coming from a Gmail, Yahoo, that's, we always tell people lead with the skeptical heart. Well, if you don't have business class email and you're getting emails from coworkers and you're sending stuff to finance from Gmail, Yahoo, how skeptical can you be? You're kind of desensitized to those personal emails being involved in the part of the process. So cleaning that up is something that, I don't know, I guess heading into this was a big learning curve for me. I just assumed because it was 2022 and these guys make a ton of money that had been kind of wrangled to this point. And there are a lot of dealerships that don't have business class email.
Yeah. Yeah, no, you're right. You're right. It's interesting. So you had alluded to being underinsured and some of the things that aren't included in a policy. Right. Are there any other kind of low-hanging fruit, we'll call it, that dealers can look at and kind of look for and say, okay, these are some of the common things that aren't in a quote-unquote standard policy or an add-on policy, right, an addendum policy. Are there any specific things, maybe 3, 5, something that you see consistently that just aren't there?
Yeah. So first of all, I would tell any dealership that's north of $5 million in revenue, you really need to look at the open market and not and have a standalone cyber policy. The odds of you being covered in a breach by any type of cyber addendum, if you're over 5 million in revenue, probably not very good. The most common occurrences that we see are sublimits. And what that means is, you'll have a typical, and listen, I want to, for everybody out there in podcast land and connected land, I'm not throwing these insurance carriers under the bus. They do a phenomenal job at wind and hail, dealers open lot, property coverage, work comp, all that stuff. They just, for lack of a better word, suck at cyber. And it just is what it is. They'll give you the warm and fuzzies with a top end aggregate number of 1 million, right? And then we'll see the main one that I see is business income that's sublimited out to $250,000. And man, if you're down and you can't sell a car, I ask people all the time, if you're a Dodge dealership, how likely is it that somebody else can go within 50 miles and go buy the same Dodge at another dealership? And most people are like, yeah, they can, we can get it from somewhere else. Well, you've lost that sale, and that business income sublimit. I mean, you can blow through $250,000 in a day for some dealerships, or 2 days.
We just said the ransomware average is what, 405,000. So the kind of thing is, again, let's just take it for face value. It is a added coverage to another type of policy, and from the carrier's perspective, that's their way of dipping their toe in the water. They don't fully quite know cyber or want to know cyber, but they're like, we will provide you $250,000 to cover what might come of that. It will be carved back. But oftentimes there is kind of that growing phase of learning what we don't know, and being able to show them that, okay, here's what this looks like in a full, robust policy that includes first party coverage, meaning that they will pay for the investigation, the data restoration to your equipment, where legal and applicable, they will cover fines and penalties, as long as you have things that are in good shape. There are ways about this to where it's not all about the liability. And I think coming at it and understanding that the actual business cost or the risk to the enterprise is oftentimes on that first party side, to where, yes, mailing a letter and notifying clients and setting up the credit monitoring systems is not free, but it's going to be the $1,000 an hour specialists that are rebuilding your systems that are really going to kind of add up. And so making sure that your policy covers things like that, or, we alluded to it earlier, extensions for funds transfer fraud or social engineering. I mean, if someone is acting as your dealership and using your letterhead, I mean, if they can go and right click on your website and there it says, Force-Pace dealership, and they go and try to collect $35,000 from someone that, all they have to do is find somebody that has that sticker on their car. It's not too hard to make that leap. Does your insurance policy cover it? These are questions to ask it, because there are forms that cover it and there are others that don't. And I think where, again, having your people around you and kind of be that translator is, carrier A will call that social engineering. Carrier B will include it in different types of coverage sections. And so sometimes there is coverage by what's not mentioned in an exclusion. There are a lot of different ways, and it's understandable why people are jaded with the insurance process. But I think where we're seeing cyber grow into it is the modern kind of sleep insurance. It's what D&O was referred to back in the 90s. It allowed the leadership of the company to sleep well at night. Cyber insurance it gives you that access to the resources. When things go wrong, you establish privilege and you set certain, processes in place. It gives you that kind of credibility and maturity without necessarily having to wake up one day and invest hundreds of thousands of dollars into solutions. So I think understanding that it is a worthwhile process and what it actually means to the organization is more than an add-on. And I think, there are folks that value their time in hours, and so it's like you can quantify the value of that to the organization and show them here's actually where this is going to matter when Joe in the parts bay, actually it's been all 6 of them using Joe's account information, but somebody downloaded a video, right? And understanding that these things do happen. It's okay that they happen, but that's why we're here and why the cyber insurance exists. And so relying on kind of a bare bones policy, again, it's gotten you this far. Let's make sure that you get where you need to be.
Yeah, and it's a matter of going beyond checking the box, I think, is kind of what you're getting to, right? I mean, there's certain, and even some manufacturers at this point are saying, hey, as part of your franchise agreement, you need to have cyber insurance, but it's not necessarily prescriptive, right? It's you need to have this thing. So in some instances, it's a checking the box exercise. But what you're saying is if you're going to pay for it, you may as well get something out of it, right? I mean, don't just check that box to check the box. If you're going to pay for it, you may as well pay probably more, but you want to be covered on the back end.
Well, yeah, if the difference is call it $5 or $10 grand, if it's 45 for the cheaper option and 55 for the more, I guess, expansive coverage, that's a business decision. There are businesses that are like, hey, look, I'm good. Like, we're okay. We'll play that, but we've been fine so far. And they might be. That's the name of the game, I think. But you're right. It is kind of understanding that, where the prices are originating from is kind of the mindset around those that are okay and those that take hits. What we've seen is that a lot more companies have taken hits than expected. And so, it's worth, and it doesn't, I guess the other important piece here, it doesn't necessarily have to be the business owner. It doesn't have to be the head of ops. It can just be a facilitating the connection between, say, the insurance buyer and the IT person, right? Like those are professionals that are on staff that can run with this from there. It doesn't require 5 hours to handle it. Let's just get after it and connect with the right folks. So I think there is a stigma around what's involved for cyber insurance. That's like, man, they're going to ask me technical questions that I don't know the technical answers to, so I'm just going to not do it. And that's one way to do it, I guess.
Yeah.
And put yourself in the shoes of the dealer, facing these FTC regs, a lot of unfamiliarity, a lot of uncomfortability around it. So this guy shows up on my front desk and he says, hey, the government's imposing regs that haven't been there. You've got to do X, Y, Z to be compliant. So I align with this compliance group and they check all these boxes for me. They tell me I need to hire an IT guy for the first time in the history of our dealership. So I hire an IT guy. He tells me I need MFA. I need all that stuff. I do all that. I've got a trusted insurance guy, right? And I've been with him on the property and casualty side forever. And I asked him, hey, do I have cyber? And he goes, yeah, you got cyber, right? So I've done all that stuff. I've done everything they told me to do. And then 6 months later, I have a ransomware event and I submit a claim and it comes back that I don't have full business income coverage. I have a ransomware sublimit and, breach response is not included. And I'm sitting here and I've done everything that everybody's told me to do. And I'm still looking at a $1.2 million loss sheet. How unbelievably frustrating would that be? It's like, why did I do what y'all told me to do? And the reality of it is, rewind back to the beginning of that process. You asked your insurance agent, do you have cyber insurance? And they said, yes. Dive deeper right there. Stop at that moment, dive deeper and go out to the market, man, and pay $3,000 or $4,000 more for a little bit better coverage. And man, it makes everything flow so much smoother on the back end.
Yeah. The clearest kind of example I've had, and I sorry to harp on this point, but it's like, there was an event a couple of years ago, pre-pandemic, where the business was down for 7 days, and it wasn't for any technical issue. It was that there was a 7-day hold for them to convert their currency to Bitcoin, right? Like these are things that, you don't think about when you're trying to set up like your business and, making sure that you're efficiently running your operation. You don't think, well, is there going to be a bank hold for 4 days for a wire transfer? It's just wild that the things that you run into through seeing it. And so, I guess making sure that you have, again, the right people around you and the reassurance that it's more than a piece of paper. You're actually looking for kind of that guidance in the times of need. And so basically, yes, go beyond just checking the box, is really the overarching theme here.
Yeah, good. One other thing I wanted to just pick your brains on quick too is timing of all this. So my hypothesis is that people aren't proactively reaching out and thinking about cyber insurance or cyber protection or cybersecurity or any of this stuff. Typically, my assumption is what is experienced is either an event happens at a dealership or an event happens to another business that they know, whether it be one of their friends in a 20 group or one of their other business owner friends, and somebody close to a person experiences an event, and that triggers, oh boy, that could happen to me. I need to go do something now. Or worse, it does happen to you. It's like, oh, I gotta get moving on this so it doesn't happen again, right? So that's a guess, but I'm curious, what you are seeing as far as timing. Is there a lot of proactive reaching out, or is it pretty reactive still?
I would say on the whole, it is still pretty reactive. I mean, it takes there has been a certain kind of just checking out of cyber breaches mattering, unless it is to someone which is both a shame and an opportunity to kind of like be more proactive. Because really what we're seeing is that it does take someone in a small group, someone in the kind of the sharing sessions of like, I'm not going to stand on a conference stage and share this story, but I'll share a war story with some buddies kind of as we're learning and sharing kind of best practices around this, because I don't want people to go through what I went through. Sort of that's been the mentality around it. I think where we have seen, or where it's been more interesting, has been it's oftentimes not for the traditional reasons that insurance is jaded. It's not because the claim was denied. Like the carriers have been pretty good about standing by their forms, which is a separate rabbit hole on its own. But I think, where we've seen issues is that there has been no real communication from the carriers through the brokers to the clients and to the stakeholders within that client of what is accessible, what is the value of this, and how does it connect to the broader enterprise. And that might be a more esoteric exploration for the entity, because it really closely tracks the technology side of how is technology impacting your business. But I think the focus is to not let it become mundane, and really kind of use it as a rallying point for the team to say, okay, look, just like we decided to list cars online, there is a process about learning what we don't know. And this can actually help our organization become more efficient, especially as buying habits change and the data collection around that changes, or what the OEMs require changes. I mean, this has been kind of a slow moving process that a lot of change is going to happen around it, but it's going to be very good to be in tune with the kind of technical processes that it entails.
Yeah. Yeah. And as a child of two teachers, how do we make this applicable? Like, when should the conversation happen? Like, if you're a dealership out there and you're listening, like, when should I look at my cyber insurance? When should I dig into this? These FTC regs are going to require that they have a breach response plan. If you are out there in the podcast verse and you're a dealership and you have a written down, personalized offline breach response plan, pat yourself on the back, go have a beer, do whatever you do, because you are literally in the top 5%. Nobody has those right now, but that's going to be a requirement moving forward. And when you're doing that breach response plan, it's what do I do when the stuff hits the fan, right? So I've had a breach. At the beginning of the breach response plan, we should have call my IT guy, call my insurance agent, make a claim, call my lawyer, right? Those three things should be at the beginning of the breach response plan. That's a great time to look at your cyber insurance plan, because you're literally writing into that breach response plan, who's my insurance guy? What's his number? This is the guy that I call when I have a claim. Time out. Let's hit the pause button. Let's evaluate this coverage. Let's evaluate the carrier. Let's look at the sublimits. Let's look at the exclusions. Let's take it out to market. Let's price it against Tokyo Marine, CFC, AtBay, some of these private carriers. And let's look and see at our insurance program, while we're looking at this breach response plan, do we have coverage that meets our revenue exposure? Do we have sublimits that would put us in a bad position in the event of a claim? Do we understand what's even written on that policy? So if you want a functional how to moving forward. As you're meeting these regs and you get to your breach response plan, phenomenal time to look at your insurance.
Yeah, I would just kind of use that as a charge for the 20 groups and small groups out there, that it's kind of a good session to have with your folks of just, the theme can be what happens when things go wrong. It doesn't necessarily have to be around cyber, but test your operations, learn from each other around how this works, and, build in exercises that kind of accomplish more than just an insurance goal, right? It's understanding, what does your enterprise look like? Do you have IT specific legal counsel? Are there forensic firms in the area that you want to contract with that would be covered under your insurance policy? Like, it's good to kind of help your network and the businesses around you and understand, how this all plays out, because, I mean, quite honestly, you want that bat phone to be picked up, and you share this information as best as you can. So that would be kind of my charge, is use it as an opportunity to learn more about your organization.
No, that's great. That's great. One last topic I want to just touch on briefly probably is, when you think about policies, right? And you think about writing policies, some of the things that I've heard pretty recently actually is, if you're a dealership or any business, frankly, but if you're a dealership and you work with certain IT companies, certain cybersecurity companies, it kind of almost checks the box for the insurance agency as well, where it's like, we've seen a lot of dealerships that work with X, Y, or Z company, and we know that they have their stuff together. Is that pretty common, I guess, where you have a certain set of cybersecurity companies or IT management companies? It's like, all right, these guys know what they're doing.
Yeah, I think it has been kind of the evolution of our side of the world, right? Is that you saw it, like, in the early days, there were specific boutique firms, but then, I mean, Aon bought Stroz Friedberg, Marsh built out its operations. The alphas really started building out their expertise on that side of the house. And really what it boils down to is, if we're going to talk about and sit in front of a client and say, you need MFA, the natural thing on our side to make our business more efficient is to say, let us help you with that. And so for us, you're right. It is about finding the right partner, but it is also becoming commoditized in that, again, you're not trying to necessarily search for the mundane. So, it is kind of, how do I provide value? But the whole kind of knock on insurance is that it's like, it feels kind of like a grab. And that is what we want to avoid. And that, it's kind of understanding that, again, keeping it to property, it's like, okay, we'll give you a discount on your storm doors is really, where we're coming at it from. It's not necessarily like, okay, let's just try to increase the recurring revenue per user. It is just, how can we make the organization safer? And I think the other piece of that too that's nice is that, Underwriter Labs with electricity was kind of born out of the safety around that. Seat belts came out of it, different things around industry groups and standards. So I think having that approach to it really makes it easier to work together and overcome. But it's interesting how, kind of, you're right, it has become such a main partnership between tech and insurance. I don't think anyone would have predicted it 15, 20 years ago.
Yeah, and I assume there's discounts or at least lower premiums for, when you have certain things in place with technology, right? I mean, it's not so,
and there's, you can't necessarily correlate it to premium change, right? I mean, that's something that's kind of like, you don't want to guarantee. I feel like that's my safe harbor disclosure is past performance does not guarantee future results, but it is, I think it does make for a better story when, if you implement mid-year, you can go back to the underwriters and say, not only do we have MFA and endpoint detection, but, we completed your cloud supplemental and gave you background on this. Like, that helps. There is no denying that. Good, like, there's a reason why Progressive has the thing in your car, or that you can put into your car, and the telematics around it. So I think it is moving in that direction. It's just interesting to see how it evolves. As I hear guys that were doing property and casualty insurance for a while, asking me what does MFA mean, and it's a fun kind of journey for us too. So yeah, you're spot on there.
And don't discount being able to get coverage, period. That's there is a carrier right now that's really hot in the auto dealer industry, right? And they have certain underwriting guidelines. And if you want the best rate right now at the moment, it's kind of like you want to be with that carrier, right? So you go in there, looking not so hot, you show up to the dance in sweatpants and a ball cap, they're going to go, I don't know that we want to dance with you guys, So those controls, they can be tied to lower premiums, but don't, especially in a hard market with a lot of losses over the last 3 years, don't discount being able to have a seat at the table, period.
No, that's fair. That's a good call out. All right, well, gentlemen, I could talk to you for hours. Obviously, like we said at the beginning, this is a pretty deep topic, but it's been a really fun conversation. Kind of went all over the place. Anything that we haven't touched on that you want to make sure we do before we hop off here?
I think we're good. I mean, just thank you for the time, and happy to dive in whenever. It's one of those things that. I'm sure we'll have an update soon. It won't take too long before something to change. But my advice would be, again, kind of rely on the team around you and don't be afraid to kind of talk to those that you trust and figure it out, because it's not too hard. It is something though that can feel daunting. Yeah.
And you see my background there, coaching background, and my coach advice would be, don't let past success kind of guide you into a false sense of security moving forward. Just because you've got a dealership that has been knocking down $80-90 million in revenue and you're successful the way that you've always done business, man, don't let that lead you into a false sense of security moving forward. Nobody likes these regulations. I get it. It feels like overreach. It feels like extra to do, but they come from somewhere. There's a reason that they're there. And I sat down, we wrote a cyber insurance policy for a farmer. Farming's another industry that's really growing in the tech space. And I had a 78-year-old man look at me and say, "Thank you for coming by, because I figure it ain't what I know." And again, I'm speaking in Southern, it ain't what I know that's going to get me. It's what I don't know that's going to get me. And you talk about a guy that had a ton of success, but acknowledge that the goalposts are moving going forward. Don't let that past success blind you to what you need to do in 2023.
Great takeaway. Well, Andy Runyon, Forrest Pace from Brightline Insurance Services, really appreciate all your time and chatting today, and hope we can catch up again soon.
That's like a plan. Thank you so much.
Thank you so much. Yes, sir.
All right. Have a great day.
You too.
Well, that was a really great conversation, a little long, but I hope you found it valuable. A lot of topics that just require some digging into. So really appreciate Andy and Forrest from Brightline Insurance Services hopping on. And before we jump off, don't forget you can watch or listen to all episodes of Connected on YouTube, Apple, or Spotify podcasts. And make sure to hit subscribe so you're notified every other week when new episodes are released. Thanks so much, and we'll see you in 2 weeks.